welcome to this episode of China Edge, brought to you by the SupChina team. I'm your host, Lizzie, an MIT-trained economist turned journalist here at Wall Street TV who covers China and its relation to the world. Here at China Edge, we go beyond the headlines and guide you, our audience. Through the jungle of Chinese regulations, we go deep into industry trends and identify challenges and opportunities in the Chinese market. Please join our conversation every week for interviews and analysis with the most knowledgeable minds on China. Also, stay tuned for future special panel discussions with Kaiser Kuo, host of the Sinica podcast, and Jeremy Goldkorn, editor-in-chief of SupChina. Hi, this is Lizzie, host of the China Edge show. We have prepared both English and Chinese subtitles for the show. You can turn on subtitles by clicking the CC icon at the bottom of your YouTube video. Click on the gear icon and select from one of the three languages: English, Chinese Simplified, and Chinese Traditional. 大家好，这里是李琦。在 China Edge 节目中，我们为您准备了中英双语字幕，请您按照屏幕上的指示打开齿轮图标，选择需要的语言，然后选择 CC 按钮，打开字幕，这样就可以看到有字幕的节目了。Jack Ma's Ant Group will apply for a key financial license. Will PBOC accept Ant's application to become a financial holding company? Is it a sign that Ant, after its failed 2020 listing, has finally satisfied Chinese financial regulators' requirements? What's the implication for China's fintech industry and its tech giants in general? Joining me today is Martin Trozempa, research fellow at the Peterson Institute for International Economics. Martin, thank you so much for being here with me.
Thank you for having me.
So, Martin, for starters, can you please help us understand how a duopoly of super apps developed by two private tech giants in China has come to dominate the country's finance?
Sure. So when Alibaba and Tencent were beginning in China, in the early 2000s, even late 90s, the online payment system was very basic and rudimentary. It was almost impossible. You had to, if you wanted to make a payment to Tencent as a subscription for their services, you had to walk to the bank or to the post office and actually submit a money order. So the state-owned system was very backwards. And then fast forwarding to around 2014, the coming of mobile really was something that was missed by UnionPay, but really taken advantage of by these companies by using QR codes. And QR codes just made it very easy for small businesses or just about anybody to accept online payments, online or offline. Before this, they were already used a lot for, say, e-commerce purchases, but not much in the offline space. And then once the QR code system began to be built up, it was really a race between Alibaba and Tencent, because each realized that if you are able to get users to connect their payments, their bank account details and make payments with your service, you have the foundation for a super app, because you can move the money around, not just data. Mm-hmm. They engaged in a subsidy war, starting with Didi and Kuaidi at the time, which were separate companies, trying to get people to adopt it. And ultimately, if you wanted to boil it down to one thing, it's competition. It's that before them, the state-owned system, the UnionPay, had no competition whatsoever. It was legally a monopoly. But then instead, you had two large companies competing to gain market share, and that competition is what drove the advancement of China's mobile payments and created the duopoly we have today.
Right, and from your description, it seems that the government allowed them to grow. So looking back, why did the Chinese government give the fintech giants so much leeway to compete and to innovate? And why did it suddenly hit them with the regulatory storms in late 2020?
So many of the officials within China's system were frustrated already around 2012 with the way that the state-owned banking system was not upgrading, not using technology the way it should, not providing enough services to the vast majority of Chinese people, insufficient credit, non-digitized payments, etc. And there was a real sense that the only way that you're going to get that improvement is not by ordering them to do better, but to bring real competition into the system. And that would hopefully strengthen, they were thinking, China's overall financial system. And of course, they're private sector players, but private sector was really the only way you're going to get this kind of innovation. And they recognized it. People, especially Governor Zhou Xiaochuan of the PBOC, recognized that this was the key to modernizing China's financial system. And then I think what they found is that the issues were some things they didn't anticipate, which is that before a few years ago, there wasn't a recognition that the online platforms, whether it's in China or the rest of the world, were really a big monopoly problem. And but then the whole world kind of woke up around the same time to these issues and began to consider that actually you might replace a state-owned banking monopoly with a monopoly of tech companies that's even more unassailable because they have the advantages of market power, not just in the financial system, but in the data and outside of finance as well. They began to be very concerned about the competition implications, potential conflicts of interest, and concentration of risk, and all this that would entail. And that's what led to the crackdown.
Right. I wanted to turn to the news cycle a little bit. As we read from Bloomberg and also Reuters, it's rumored that Ant may have received approval from PBOC to set up a financial holding company, and that Beijing might have even given Ant a tentative green light to revive its IPO in Shanghai and Hong Kong. So what should we make of the news? Are the regulatory storms over? Is it because of the macro headwinds this year? What's going on there?
So overall, there's been, the crackdown framing is very useful, but it misses what I think is more like a durable shift in the way that the government and business interact in this sector. It's not like there's a moment of more regulatory scrutiny and then we go back to the way things were before. We're going from an extremely unregulated or underregulated system to a much more regulated system. And the shift from one to the other creates a lot of chaos and uncertainty that looks a lot like a crackdown has been talked about in that way. So Ant actually would rather not have a financial holding company. It would rather continue to have all these financial subsidiaries that are regulated by many different financial regulatory bodies, but that the group layer is something that's under a lot less scrutiny. That's the way that it was before. And it had even hoped initially to only put the financial elements of its business into the financial holding company and to keep the rest of it, the more technology, services provision part outside. But the regulators actually forced it to put the entire thing in there. So, the PBOC has denied that it has issued approval to Ant to do so. We've seen a lot of leaks recently, kind of in this positive direction, not just around Ant, but also around, some other issues like the resolving of the audit dispute with the United States that turned out to be denied by the Chinese authorities. That doesn't mean that Ant's not making progress towards the rectification, but I would just say that there's a lot of caution. In part because the regulators that approved a fast tracking of the IPO of Ant back 2 years ago have been under investigation and are under a lot of scrutiny for how they favored the company. So they're going to wait for very clear political instructions before they greenlight any IPO. And any IPO is not going to look remotely like the initial plan, because the company is under much more scrutiny, can't make the profits that it was hoping for before as a result.
Right, and we should mention Martin writes the most authoritative book on this topic. I wanted to turn to a big picture a little bit. In your book, The Cashless Revolution, you describe the Chinese super apps as Facebook, Google, Twitter, Goldman Sachs, Amazon, JP Morgan Chase, all rolled into one app. So in general, what are the risks if we allow big tech to become big finance in China?
Well, one of the risks is that you'll have a conflict of interest. So say the platform will give loans to small businesses because they want to make more money off of each element of that process. They make money by charging interest on the credit. They might make money from facilitating the loans. They might make more money from selling more on their platform. And so you have all this reason to increase credit, which might give you a reason to lower your credit standards, especially if, as has long been the case, most of those loans end up getting offloaded to the banking system. So someone else ends up being on the hook for the risk if the loans go bad, but the platform has benefited a lot on the way there. And we've seen in China time and time again that when financial companies are associated with big non-financial businesses, that often those banks end up getting raided by the corporate partner to boost profits and potentially hide losses. And then that can create large instability. And of course, these cases so far have been relatively small, But when fintech goes from being very small to being the way that everybody runs their whole financial system in China, I mean, average people will barely interact with their bank anymore. All the payments are with Alipay and WeChat Pay. They'll put their investments into digital wallets there. And that fusion, it becomes extremely powerful. So it can grow very quickly, much faster than regulators can get a handle on. And that concentration of risk can be a real concern from just about every possible angle. So the authorities have been trying to split up, in a sense, and create some functional safeguards between the different elements of the super apps so that they operate more on an arm's length basis.
Mm-hmm. So your book was published before this Common Prosperity Initiative. Has your assessment of the future of China's cashless revolution changed since then? Today, if an investor is looking at the fintech industry in China, what are the risks and opportunities an investor should take note of?
So there's a lot less space for disruptive innovation than there was even 2 years ago. I would say I do have a lot of the post-Jack Ma speech crackdown and shift in regulation, including backlash against big tech companies, in the book. And from a common prosperity perspective, I think the most important element to consider is that the government really wants to reduce the take rate, the amount that credit ends up costing, and the amount that technology companies are able to charge the traditional financial system for providing technology services. And that obviously puts downward pressure on margins. The other element is the increased focus on data security and data privacy, and that makes it harder to monetize the data collection involved in finance and could end up leading to a much smaller market for fintech, especially credit, than would otherwise be the case.